Thanks so much for tuning in to this conversation on Talking Point. We are in conversation with Sanjay Jalona of L&T Infotech. They've come out with the numbers last evening, and it looks a very good quarter compared to what was estimated. Let's get him in on the conversation to talk about what stood out for him. Sanjay, thanks so much for joining in. I hope all is safe, and congratulations on what seems to be a very good quarter. You must be a happy man.
Happier, a happy man is taking a little too far with all the situation, the terrible situation that we see ourselves with folks and team members and family members in India. This time around, we have all seen terrible losses, a lot closer than what we would have thought would have happened. But on business-wise, we have done well. The resilience that we have built in the system, in the business, continues to show good results for us. We have done 4.7% quarter-on-quarter growth and a industry-leading 9.5% growth for the year. So we are happy with where we stand with regards to business, the kind of conversations that we are doing with customers, but terrible loss at India, and that leaves a lot to be desired.
It does indeed, but hopefully things will improve soon. Bombay is showing some signs of that. Hopefully the rest of the country shows that. That's the hope. Sanjay, a question. I, in your release, read the term Fortune 500 four times in the recent deal wins. Did a lot of these come in quarter four? Because I know that there was one large Fortune 500 deal win in quarter three as well. How was quarter four on the order flow?
It's been pretty good, right? So there is a lot of pent-up demand that we are seeing. We call it the Great Restructuring after Great Depression and Great Recession, simply because every industry has to restructure themselves to deal with the new normal. We are seeing a lot of investments going in, making the ability for the employees, the work to be done remotely, and secondly, a lot of digital interventions that automatically creates a lot of opportunities for companies such as ourselves to help our customers move towards being competitive in the new landscape. So we have seen good pipeline growth all across. The nature of demand seems to be changing a lot. We are seeing a lot of demand in existing sets of customers as they need to all become competitive in the new world. We closed two large deals, two new Fortune 500 logos, and we were all thinking, how will we do it? 1 year back, if we had thought about opening new logos with no one traveling, it was not something which we could think of. But we are very happy that we are opening new logos, Fortune 500 logos. We're also close to large deals, which gives us a great satisfaction today for business.
Also, the top deal win that you've spoken about speaks about how it's a fairly unique deal as well. Would you reckon that the nature of the deals being unique adds to the color, and would you expect this to spill over into the first half of the next fiscal? The deal wins, the logos, the size, and the nature of clients.
See, this great restructuring that we are seeing, and you're talking about the Islamic Bank deal that we announced. In 2 years, we will help the bank transform itself. It's about the same thing, right? Every company is looking at ways and means to make themselves nimble, to come out with newer products, attack newer geographies, and so on and so forth. So, in the first year of COVID, we did see some softness on core banking transformations, but we are in tremendous discussions on all things core banking as well. So we do expect the momentum to continue in times to come. We have record numbers of open position today. I think that's the same case with most of the tech industry, as all the companies are trying to deal with changes required because of the new normal.
Yeah. Yes, indeed. Sanjay, just a question on how was the quarter when it came to the employee front? Because the reason I ask this, when I look at you and all the top tier companies, there is no clear trend about attrition or retention, and every company seems to be fighting its own unique battle. You were supposed to give wage hikes, maybe bonuses, etc. in quarter four, and there was expectation that there will be a sharp drop on margins. I think you've contained it well. So how has that been? The attrition as well as the wage hikes, were they given fully in quarter four? And therefore, would it be safe to assume that these are the base EBIT margins from where you can work in FY22?
So we did give a salary hike. Last July, we had postponed. Our cycle is in July. We postponed it out. We were not expecting to give it till July of 2021, but we did give one on 1st of January this year. It covered by and large everybody except the title holders in the company. So everyone had a salary hike. We had also, given the momentum and the positivity that we are seeing in the business, we have also preponed our salary revision cycle from July to April 1st this time. As far as the margin goes, the momentum, the investments that we are making in localization, investments that we are making in hiring people ahead of time, making investments in terms of the technology investments, product investments, etc. We are sticking with the margin guidance like we do every year for it to be in the narrow band of 14%.
Could quarter one see a sharp dip because of wage revisions that are planned, as you said, and the cycle being preponed?
Look, I think you will have cyclicity in quarters as far as margins go.
Sure.
But I think it's important for the industry to look at, for the analysts and the companies, investors to look at it from the yearly basis. So we are confident of managing margins at the narrow band of 14%. We still want the shareholders, the investors, the customers, everyone to see us as a growth company with a focus on driving growth, focus on investing in building capabilities and making a difference in the marketplace. And that's who we are. That's where we'll focus on.
Okay. Sanjay, a quick last couple of questions. This year, in the first 9 months itself, you reached the order flow that you had reached in the whole of FY20. You talking about the base is very high. One, the run rate, would that be continued? And I'm guessing you're sticking to what you said at the end of quarter 3, which is that in FY22, you will be in the top percentile of the industry when it comes to growth.
Look, with the growth momentum that we have seen from Q3, where we grew by 5% quarter on quarter, and now with 4.7% quarter on quarter, the exit velocity, the pipeline that we see ourselves with, the conversations that we are doing with the customers, I continue to reiterate that we will be in the growth quadrant in FY22 as well. So we feel very positive about the momentum. As I said, we have the record number of people to be hired. We have hired more people than ever in the last quarter, and we'll continue this momentum.
What can go wrong, Sanjay? Everything is looking good, but what can go wrong?
Look, I think many things can go wrong. We are all bothered and concerned by the situation in India right now. We hope the numbers start to come down. It's a terrible loss, and hearts go out. It's very heart-wrenching. Our heart goes out not only to our employees, but Aam Aadmi in general. It's very difficult. As far as our businesses go, we typically do business planning for locations. We have come to a point where we are doing business planning for projects because we don't want to hamper the ability to support our customers. We don't know how far it will go, whether there'll be a wave 3. We don't know what else will happen. So we need to take all precautions to be able to support our customers in times to come as well. So we are all making sure focus is very, very narrow, focus on our employees and focus on our commitments to customer. I wrote an email in the last 10 days to our customers with the situation in India, and it's been so thoughtful, so touching. The overwhelming response that we have received from customers about the situation in India is incredible. So we'll keep focusing on doing the right things, and hopefully, everything will fall in place.
Anything we can do to help you in that, Sanjay, please feel free to count us, all of us at BloombergQuint and me specifically included in that. But all the best. Keep up the good work, and thank you so much for speaking to us today.
Thank you for having us. Thank you as always.
A pleasure is ours. And viewers, thanks for tuning in to this conversation with Sanjay Jalona of L&T Infotech.